And welcome, everybody. This is a brand new show. It's actually untitled, but we'll get to the theme here in a second. But what we need your help with this week is a name. So after you watch this show, come over to Twitter and give us a name. All you got to do, we're going to have to tweet up for this. Come check us out, leave a name. And the winner is going to get some undefined amount. I'm pushing for more. Kids, trying to bid under me. So we're going to follow, we're going to fall somewhere in the middle. And there's going to be a winner. So the topic that we're going to cover today, and I actually think this is really relevant, we're going to make this either like a weekly series or like a monthly series. We haven't really decided yet, depending on everything. But this is going to be me and Kit going over our top 5 yield generating places for Frax and fractures, or just really the whole ecosystem, right? Yeah. So if you're looking for yield, this is the best place to be. And so I have 5 picks and Kit has 5 picks, and we're going to show you the best, or we're going to show you our favorites for where you can earn yield with everything in the Frax ecosystem. So Kit, you want to flip for it, or you just want to kick things off? Maybe we actually share some things. I have some pretty esoteric things. So
okay.
Maybe you should go first, and then I'll come in.
I'll go first. I stuck with some pretty.
Okay, so number one. Okay, so
number one. Explain the rules. Explain the context. Yeah.
So you're just gonna say my first pick, right?
Mm-hmm.
Yeah, and then we can go from there.
Okay, but
it's like the draft, right? With the first pick in the draft.
But let me qualify a little bit before we jump in, because I this is self-imposed. First, it has to be on ETH. Second, it has to be at least 2 million in TVL, just to be not full ruggy. At least for myself, because those are at least my benchmarks. So first things up, my first pick. This is your Frax stablecoin against a stable pair. Okay, Frax stablecoin against a stable pair. And the choice I went with is DOLA Frax BP. And you could do that through Convex. And it's generating 18% APY for the last 30 days per DeFi Llama data. So it's not just what the sticker APR is, but it's actually what has been tracked by DeFi Llama for the last 30 days. And it clocks in at 18%, which I think is pretty damn good.
It's pretty good. And also, like, it's important to look at like the yield chart to make sure that like all the yield wasn't earned in like a day because of fees or something like that, right?
Yep.
Nah, that's a good one. That's a good one. I like that one. Okay, so do you want to hear something that's stablecoin or non-stablecoin?
Well, it has to be match mine. Frax stables with a stable.
Oh, you got to. Okay, so I'll go with one of my stable coins as well too. So my first pick for where to find the best yield with stable coins is also going to be a convex pair, but I chose the USDD pair, and I guess looking at it, it actually if you look on the Frax staking page, right, it has, where is this? It's getting 5.3% right now, which I don't think is as good as the DOLA one, right? So like,
yeah,
I believe USDD comes from is that the Tron stablecoin?
Yeah,
it is the Tron stablecoin. Justin Sun paid me for this number 1 pick.
Yeah, I was like, this is a shill. I was like, not only did you come underneath mine, but you picked a Tron out of all things. And reasoning. Well, I didn't give my reasoning.
Oh, why did you pick DOLA? I mean, DOLA's actually, I actually have issues with DOLA, and I'm going to contest this pick, right?
Okay, sure. So
DOLA is from Inverse Finance, right?
Mm-hmm. Yeah.
And Inverse Finance had a couple of hacks, and they're actually sitting on a lot of bad debt right now. So I think they have like $18 million in bad debt that they need to pay off. And so I think the DOLA thing is going towards, don't get me wrong here, I could be wrong here, but I saw this on Twitter yesterday or a couple of days ago. Let me see if I can find this. But I think what happened was that DOLA has like 85% bad debt for, so I'm just looking at this. Let me just tell this to you. So DOLA has a TVL of like $27 million or $17 million or something like that.
Yep.
And Inverse Finance has like $14.68 million of bad debt. It's like 85% bad debt ratio to TVL. And you can find this information at bad-debt.riskdow.org. I'm going to share this right now.
I didn't even know that. Send it to me.
So this may be one of the reasons for, yep, there you go. Okay. So this may be one of the reasons for the bad debt, right? So let's come down and Inverse Finance, right? So this was because one of the hacks that they had. Okay. So we classify, so it's uncollateralized. Something happened with Frontier. And I think they just like closed down the market and then they're using protocol funds to pay it back over time.
Right.
But Inverse used to be a lot bigger. Inverse had a huge TVL at one point, and now they don't. So, like looking at the thing, let's go back to DeFi Llama, right? Can we search all protocols like ETH? Let me just search here. Inverse. Here we go. Nice. Inverse Finance, TVL. Yeah, they had 138 million locked at one time, and now they're down to like 7.5.
Yeah.
7. So should have gone for Justin Sun's tweet, man.
No, for me, I felt like even if they did have this bad debt, it doesn't mean that they're going to take, the DOLA.
Yeah.
Take your DOLA specifically. And I think right now there's a pretty big imbalance between the DOLA and Frax USDC. And I feel like you could totally put that in there. If you had a Frax base pool LP, you'll get a nice bump just going in. And I mean, as always, you just gotta move. You can't just set it and forget it. But you're also getting paid 18% APR. So like you're in this environment, like it justifies the extra risk, right? If it said differently, if this is the only asset in your portfolio and this year is generating 18% for you, like it warrants you spending a lot of time literally monitoring this one position and this one project very in-depthly. Because that's my reasoning is like it's a stable coin, so the price, like the market is not going to dump on you. Don't think that can hurt you. It's like a exploit or some like form of attack, but you will be okay from the market. And I think us being around the computer every day monitoring, like it's an okay risk to take on.
But you're locking here, right? Remember, like, well, I guess you're locking. There's a week locking time, right? So one issue that I have with like the DOLA pool, right, is let me give you two pools, right, and you can. So there's the DOLA pool, which is making 21% in Frax shares rewards. It has a max boost of 22.7%, which seems a little bit weird. Like it should be a bit higher, right? I don't know why the max boost is so low for the DOLA pool. Maybe everything's coming. It must be that everything is coming through the convex and curve rewards. Yeah. And that there's only like another percent being added on top with the FXS. Yeah. Or would you rather have max boost or let me give you another pool. This is also another pool which has 5 million or almost 5 million in TVL. The non-max boost is 18.9% and the max boost is 30.4%. So that would include like a 1-year lock. So like which one would you be more comfortable in taking a longer lock on?
A longer lock? Oh, I mean, I thought we're doing like a 1 week lock. And you know what? It's even better yet is like, so, okay. So it's just for the audience at home. Sam and I were talking and we had this like 1 week rule in which you just can't touch the position. Now, I would make an exception if your protocol is being attacked and you need to move your money. You should move the money, and because it's not locked, you don't have to lock it to get this 18% APY or APR. So like I feel I stand by it. It has over 23 million in TVL, so it's juicy. You could totally go in there. like I said, going in and coming out could be a bit expensive, just because of the imbalance right now. But like it's not
I
bad.
see it. I understand. I understand. It's a good play that goes through convex, right?
Yeah, it's a good play that goes through convex, and I feel like if you were to, oh, also for the audience at home, this is assuming a $10,000 portfolio. Okay, so you're small enough.
Well, we're gonna hold on. Don't give away all
Oh,
the surprises.
oh, okay.
We're
Oh, okay. All right. I mean,
we're gonna do something at the end of the. We're gonna
okay.
do something at the end of the show, and surprise you guys. So,
Okay.
just forget all that.
Okay. Oh, I mean, you could just post edit magic, but okay. Back to what we were
Yeah.
saying.
So, yeah. Okay, so I'm gonna go into my number 2, right?
Yes. What is your number 2?
This is my last stablecoin pick. So my second choice for yields with this Frax the stablecoin is going to be Frax Stargate, which is a newly launched pool. I believe it's only about 2 weeks old, and essentially you're dumping your Frax into the Stargate bridge, and then Stargate is then using that to bridge around. Right now, I believe there's $2 million worth of Frax in the pool. I'm just checking right now. Yeah, so on ETH, there's like 1.19 on ETH. There's $1 million on Optimism, 900 on Arbitrum, and 900 on Avalanche. So, you can drop in any one of those, and the Frax pool is currently making 6% at the moment, which is pretty good for like just being stable.
Single-sided, right?
I think, yeah, single-sided. It's not even, you don't even have to pair it with anything. It's just single-sided liquidity, which I think is pretty cool.
Okay, that's fair.
Yeah,
that's a fair one. I mean,
it's just pure exposure.
Yeah, I got no qualms against that.
Yeah,
I mean, it's 6%.
For single-sided,
yeah,
though,
no,
like
I know, no other risk. Yeah. No excess risk, and I get it. And it's the biggest risk you have is like the Stargate risk, right? And then if you trust that, you're good. And then another layer, the optimism risk. But again, if you trust that, you're good. So, okay, that's fair.
Or ETH, right? You can deposit on ETH, and then, or I guess they're once you deposit it in their thing, they're moving it all around, right?
Yeah.
When you put it to farm. Yeah.
Oh, do they? I thought they just kept it on that chain. Yeah, on that specific chain for when people come in and out of it.
Maybe it is on Optimism. Actually, yeah, no, that is the Optimism pool.
Yeah.
Let me take a look at this.
Yeah, there's the Avalanche pool, and then these are all the $1 million pairs. So, all right, okay. So the way I did my categorization is for my second pick is I did now Frax and the non-stable pair. Okay, so first it was Frax and then stables. Now Frax non-stable, and I chose CVX CRV Frax BP. And the reason why is because it is a fairly large pool, and then it's paying 32% APY. And I don't believe that, curve is going to get lower than 60 cents again.
Not much lower.
Yeah. So I'm like, so it's pretty good. So kind of upside only. And keep in mind, I am in like capital preservation mode a little bit. So I'm taking all this at the blue chip level, if not better. And that's paying at 32%. So I feel confident there.
It's pretty good. I am not in capital preservation mode. I think we're close to the bottom. Arthur came out with his like blog post today, essentially coming on to the same idea. I don't think that I don't think that Frax shares is going to go below 4, right? And we're at 6 now. I don't think the ETH is going to go much lower than 1,000, right? I just don't see the downside catalyst, right? We've gone through pretty much everything. Everybody that has been forced to sell is now sold. Retail's dried up. No one's selling. Like, we're getting to a point where the volumes are just low.
But
but
this the Mount Gox thing.
I think. Oh, let me finish. Let me finish my thing. So, like, I just think that like we could be within, a 30% of the bottom, right? Is my kind of guess. And maybe we already bottom, but like the risk to take of kind of trying to short or not allocating when, you know, there's a 30% difference when we're going to be going back up to 10,000 some point, or 40 for ETH, or sorry, for Frax shares, or 100 at some point in the future. I just think it's better to kind of like start to get a little bit longer here. And so my kind of view on this, right? And I'm going to take a little bit, I actually have two picks, right? So one I'm going to throw out, right? Because it's too small, but I think it's a really good one that nobody actually talks about. And I was heavily into this for a long time, is the Uniswap V3 pools. These are like the most golden pools to find yield in.
I agree.
Right? Because for one thing, there's no gauge for the Uniswap pools.
It's all natural.
So nobody's there.
Yeah.
And it's just, there's no liquidity there. So if you look at the Frax shares, so there's two pools that I want to talk about. So the main one is the Frax shares ETH 1% pool. Now, my understanding for this one is, okay, we may be in 30% of the bottom, right? But this pool annualized is making 60% right now, just in like a wide, very wide range. So if you kind of are able to play it at a lower time frame, you could push your APYs all the way up to 200 to 300% and you're in ETH and Frax shares. So if you go out of the range on either, I'm happy being either. This is one of the problems that I have with dollars, is that like if ETH makes a big move up and I go back into dollars, I'm not usually too happy about that. But if ETH makes a big move up and I go all the way into Frax shares, I'm totally happy with that. Or if Frax shares goes down and I go back into ETH, also happy with that as well too. So I think it's a really nice play. There's only 500K in the pool, and I think it's all seeded by the team. I'm not sure about this. This is what, like several months ago when I asked about the Uniswap pools, they said they just seeded them just to have some liquidity on there, but nobody really uses them. They're building out the Frax swap, and that's where the gauges are. But if you understand how Uniswap works, the 1% pools are just gold, pure gold.
Okay, I agree with you there. Is there a dashboard for you to view like all of the V3 like APRs?
Yes. I think DeFi Llama has it actually. Here, let me just pull it up on DeFi Llama.
Let me see.
Let me just pull this up. So DeFi Llama says the Frax WETH pool on Uniswap V3 has $550,000 of TVL over the past 30 days. I don't know how they're. Oh yeah, but I'm not sure how they're judging their. Where is this? 1 second, pulling it up. Okay, so I'm not sure how they're like judging this because obviously there's limits on things. But look at this. They say over the past 30 days, it's averaged 85.4%. And that's probably not even optimized. That's probably like a very wide range where they're just assuming monthly. I probably need to dig into their docs about like what they assume for stuff. So a 5%, 5.7%, 6% in IL, which is myth, right? So you can swap that out on there. But 30-day average APY of 80% to be in this 1% pool.
Okay, that's pretty good. That's pretty damn good. That's really good. That's really good. Good find. Okay.
So just assuming that. So what's like 80? Is this APY? We'll take it down to like 70. Just doing some rough math. So 70 divided by 12. So that's 6% a month that you're making on both Frax shares and WETH. I think it's pretty good.
Dude, solid pick. I may have made my TVL requirement too tight because I definitely did not see that one.
I think this one, yeah, I understand, but this one's an exception because nobody there's just not enough with Uniswap. But the V3 pools are always golden, and if you can figure it out and you can play them right, they work really well.
I hear you. That's attractive. So my third pick is I'm sticking with the blue chips here for FXS. I did CVX, FXS, Frax base pool, standard for 16% yield. And it's not great. but it is the one with the highest TVL, and that was kind of like my benchmark for risk. Again, I am probably much cleaner, but I promise you, my next option is a little bit more degen. I promise, but that is my choice. It's very vanilla. You could go pitch FXS and Frax Space Pool for a bit more bump, but that TVL is, I believe, like right at 2 or just under 2. So I didn't choose that. But pitch FXS is also an option. Liquidity concerns though, for both, obviously.
Yeah, I have questions about pitch. That like I'd like to put money into the pitch pool, but I just have questions about the liquidity. What I don't have questions about the liquidity is the convex staked CVX Frax Space Pool. So this was actually my next pick. This is my number 4 pick. Is the convex staked CVX Frax shares Frax Space Pool.
Hey, so we have the same pick. Nice.
Actually, is that right?
It is. It confuses the shit out of me too with.
No. Sorry, that's the wrong pool. I'm sorry. That's the one that you just picked. I actually picked a different one. The one that I picked was the CVX FXS fractures pool. So the convex fractures / pool. Mainly because I still think that like these levels for fractures are just stupid. Okay. You know, $6, $4, and maybe we're getting extended right now with the fractures price. Maybe we have another $4 to go. I think it's a good option, especially if you're like looking, if you're trying to like find a nice entry into fractures. It probably may have missed a move a little bit.
I think so.
You know,
I think
if it can come down to like 4 or 5 again, this one would be good to allocate to. But it's getting 14%.
It's not bad. It's not bad.
Yeah.
Well, wait, is it 14% on DeFi Llama?
Yes.
Where is it? For the last 30 days.
I'm looking at the Frax staking page.
Oh, I always never trust those because then Frax, the FXS token was not great for the past.
Well, I don't think it's even getting that much rewards, right? Because look here, it gets CVR. No, it's just 14%, and the rewards are CRV and CVX.
Well, I mean,
and it has 65 million in the pool.
Hold on. Where's the? Yeah. Oh, I was just looking at that as well into the yield.
Well, I'm sharing it in the thing. So there's the CVX fractures pool, and then there's the pitch Frax pool. So I guess if you want to have that dollar pair, that pitch thing is good.
Okay,
but
okay, so look at that one right there. The convex FXS Frax Space pool, the second one from the top. Second one from the top. This one, yeah. See that's the one I chose. But on DeFi Llama, it showed 16% on average for the last 30 days. So that's the difference.
I wonder if their numbers are wrong. I wonder if they're tracking. See, I always have questions about DeFi Llama because I don't know if they're tracking, like all 3 income sources, right? Like maybe it's a pretty big difference.
Yeah, I think they are.
Because maybe they're not.
Let me see. Yeah. FXS. Hold up. I may have written it down wrong. CVX, FXS, Frax, Base Pool.
So the FXS CVX fractures has gotten 16.3% over the past 30 days, and the Frax Space Pool has gotten 20.
Okay, yeah. Okay, so I wrote down the wrong one.
But that doesn't. But that look. But look. The Frax Space Pool, the CVX Frax Space Pool, doesn't include the fracture. So they're only counting this. They're only counting the CVX and CRV. So when you actually look at the staking page, the Frax staking page, it takes it up to what, like 40% or something like that on a max.
Oh, boost? that's if you lock it for 4 years, right?
No. There's no more 4-year lock. It's just a 1-year lock now. Okay. Which is really reasonable, right? Really reasonable for like.
Okay, that's fair. Yeah. That's fair. Okay, all right. My 4th pick. I'm excited to get into this one. And I didn't realize we were doing 5, but I only picked 4. But you'll like this one. So
It's okay.
this is the Frax ETH option, and this is a little degen, so you'll like it. So let's say you had 100 Frax ETH, you stake it to get that full 7% in S Frax ETH. All right, so now you're earning 7 ETH. Keep that in mind. Then you're going to take that S Frax ETH and go to Frax Lend and borrow up to 50% of the value. The max LTV is 75%. So you're degenning, but not terribly hard. Then you take that 50% of your value to go buy 50-50 Frax ETH and ETH. And then you LP it into the curve pool, the curve pool, which you drop it into Convex, and that will give you 6%. The pool currently earns 12%, but because you only use it with half of your capital, you only get 6%. Okay, and you net out also the borrowing cost, the interest of the Frax, which is 1%. So you're going to earn 5% from this additional thing. So all in all, you're going to be earning 12% on your ETH stack, okay, which is on par of the curve, which is on par with the Frax ETH. They're both the same, right? 12%. However, you now have a 1.5x ETH exposure, in addition to having the same yield as the 12%. So now,
I think
so now you just got leverage ETH exposure, all the while still earning 12%. So that's my example. And right now there is liquidity up to 1.3 million in Frax Lend for you to borrow. So
that's really good.
Yeah.
And they could deploy more as well too.
Yeah.
Like the good thing about the good thing about Stake Frax ETH is, like, unlike the Frax Shares pool, which is paying 10% for a borrow right now, the Stake Frax ETH pool is only paying 1% because the utilization is 55%. So, and that can be and literally it's limitless with that. So with another governance vote, they could increase that up to 10 million.
Exactly. So your borrow fee will be 1%. Pretty much. I feel so. So in summary, you get the same APR as if you were to LP just into the Convex pool, except you get a 1.5x leverage on your ETH with this position. So way more upside. Yeah.
Very good. Very good. So I have a little bit different idea. Again, taking the more like we're near the bottom kind of ideas, right? I think the thing to do is to get Stake Frax ETH. So my number 5 pick. Okay, yeah. So my number 5 pick is to take Stake Frax ETH, put it into Frax Lend, take the Frax that you're borrowing, and then take those funds and then start to TWAM them. So essentially, like, let's say we're going over a month, right? Execute a 1 month ETH buy to get leverage. So the good thing about the TWAM, right, is that you can pull out at any time, right? You can pull those funds back at any time. And as the funds are slowly sold into ETH, I believe you can take that ETH out and then move it into Stake Frax ETH. It'll be nice once there's an actual full, maybe somebody will build this, right? Like a TWAM where you go from like Frax into Stake Frax ETH, like they automatically take it and they stake it for you.
Gearbox Finance.
I think that's a really nice. Well, Gearbox will allow leverage, right? And that'll be big, right?
Yeah.
Where you could get the Stake Frax ETH. Another option is if you want to just like pick an entry and you don't want to use the TWAM, is just Stake Frax ETH, borrow the Frax, and just buy more Stake Frax ETH, and then just like double up and get like 2x. You could wrap it again, so you start with like 1.5, and then you get essentially up to like 2x, and you like hold that product. So now instead of making the 7% rate, you're now making the 14% rate plus your 2x long ETH. So I think you could build out, if you have the right entries, I think you could build out a really, 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 really nice long ETH position that's going to pay you, a really very nice sum.
I think that's fair. My only, again, that was under the assumption that we're near the bottom. In my example, I feel like it gives you enough skin in the game, which is exciting. You have a 1.5x leverage, earning 12%, and if things are indeed in the bottom, I would probably adjust that position and move more of it into SFrax ETH so that we could collateralize it and borrow more against it. Which I really feel like I don't know why they don't have a SFrax ETH LP token for you to borrow from. Like, you know,
I think because they want you to borrow in Frax.
No. Well, I would still be borrowing Frax, but I would use the collateral as the Frax ETH LP, convex LP token.
Yeah, I asked Sam about. I propose. I think I brought this up in chat the other day. I was like, look, I'd like to have like an ETH, like a Fraxlin position where you deposit ETH and then you borrow Frax ETH, so that you could go farm with it just for tax reasons. But if you flipped it around, where you deposit stake Frax ETH as collateral and then you borrow Frax ETH, that's also a good idea as well too. And then you can just loop, right? And then you can get some really serious leverage.
But who would want?
I don't know how dangerous
who would
that is,
want
but...
to LP Frax ETH into this without getting paid at least the staking yield, right? Like there would, because So I don't think so. But here's what I want. I wish they create this product for me. Hear me out. I want a SFrax ETH and WBTC pair. Right now, if I were to want to if I were to want to do this position, I may or may not have this position, is SFrax ETH, borrow the Frax, take that Frax, go to I believe Aave, and then deposit that Frax and borrow WBTC, and then sell that WBTC into more ETH and get the Frax ETH, and then the SFrax ETH, and then loop it again. So I had to do like 3 loops in order to get the position I want. And it's not efficient because I can only borrow not the full amount, right? So not the best in my opinion.
Exactly. That's actually really nice. You know what would really okay, so hear me out, right? What if we create a gauge just for one Fraxlin pair? Just one. And that would be a SFrax ETH collateral with an ETH borrow or a Frax ETH borrow. So this way, the idea would be that we'd be paying Frax shares to incentivize the looping, where you deposit stake Frax ETH as collateral, and then you're borrowing more ETH to then loop it in, where you're selling it to then deposit again as stake Frax ETH. And the utilization rate would be very high on this. So what Frax would need to do is to create a gauge system, or just add a gauge controller where it can receive Frax share rewards to make up for the APY difference.
I think that would be I think it would be too much FXS, because that product is going to have so much demand that a TVL is just going to flood in, right? And I think Frax doesn't have enough in their weekly gauge to bribe this one this one cannon. Like I think this is the product that you don't even need the bribe if the borrow interest is like high enough. Because like people are willing to borrow this. Like, look at the Steth, right? This is the exact same thing that Aave did when they allowed for a Steth collateral, and you just loop Steth all the way. This is the same thing, looping SFrax ETH.
Yeah, but remember, like the more Frax ETH that we get, the more fees go back to Frax shares and bids up the price.
No, I hear you. I'm just saying, like, who knows? Maybe there is a magic equilibrium where people are willing to lend their ETH out, and because they don't trust SFrax ETH, so they don't care about that yield. They don't trust Lido, so they don't care about that yield. So maybe those people only wants to hold like vanilla ETH. Maybe they're happy with like a 4% on a borrow, right? Maybe they're willing to forego the staking rewards just because they want to hold vanilla ETH for some reason.
Yeah, or you could pay them to deposit their ETH, and then
you pay them 4%, but they could have earned like 7%, but if they were to just stake it themselves.
Yeah, so pay the extra 3%
in infrastructure.
or
Yeah,
in fractures.
that's what I was saying. But I don't know how many people are out there. I feel like I don't know how many people are so afraid of staking their ETH. Right. I mean, granted, that's not true. Given that the actually, hold on, I take that back. I take it back. So after the Shanghai stake, where you could withdraw, I think the
Hmm.
amount of people staking would actually go a lot higher up, knowing that you can come in and out easier. So I think that will
Yeah,
change.
yeah.
Um, but Sam, I want to ask you then, since this is near the bottom mentality, what are your thoughts on the Mount Gox distribution in February or January, February? A
Non-event.
non-event?
Everybody's already
It's like
sold.
what? It's like $5
Everybody's
billion worth.
everybody's
Oh,
already
no, these are
sold.
new. These are new
So
distros. These
what?
are new distribution of BTC to the.
I
Okay.
understand. I understand. But everybody that already wanted liquidity on their Mt. Gox BTC probably sold off to some VC firm. And VC firms that were buying that BTC probably hedged it with like some sort of derivative somewhere, right? So they're totally fine. And they probably bought it. They're probably buying like at the top, hedging. They're cool. So like it's gonna be a net like neutral, right? So like they'll be taking off their hedges as they sell the
I
BTC.
I don't think it was that sophisticated. Um,
But okay, so let's say so there's two types of shops that are buying Gox BTC. There's ones who are just like long term. We love BTC. We want to acquire it like at whatever. We're going to buy it 70
yeah.
cents on the dollar of what these people have. Because we don't know how long it's going to be stuck, so we're going to pay 70 cents. That's cool. These people wouldn't be long anyways, so they're just going to hold that BTC and maybe hold it forever, right? That's their goal. The other people are like in it for a quick flip, but because it's been years now that this is taken, those people have already sold their speculative like parts off to other people. Like I think the amount of people that actually have like real claims that never sold and are just like waiting, like for one thing, they've been waiting for 10 years. So like, why would they sell? Honestly, like unless it's like life-changing money, like billions of dollars, like you probably don't sell. They probably see everything that's happening in DeFi. And
I disagree. I disagree
we'll
because
see.
they got in at a cost basis of $530 or some nominal amount like that. And I'm like, being up this much, they might not sell a lot, but there will be, said differently, there will be some marginal selling that I don't know if there will be the other marginal buying to offset that.
Well, I guess the other question is if you're going to ask about the Mt. Gox thing, like is Shanghai withdrawals, is that bullish or is that bearish?
I think we rally into it and then we dump a little bit after it. But once people recognize it, it'll go back up because now you could go in and out easily because there's a queue. The problem is as the queue decreases, I think people will start buying in more because they know that they can get out, give or take however long the queue is going to take them. Like I think I don't want to say a non-event, but if you're just holding, just hold it through. It's my bet.
Yeah.
I trade, so I probably trade it.
I think it'll be fine. I think like the market's already priced it in, honestly. Mt. Gox distribution is already priced in.
I don't know. I definitely don't think it's priced in. I think we're too happy to be priced in, to be a little frank. Like I think we're a little too happy. But
I remember. Okay, so you were here for 2017,
mm-hmm.
2018, right? The thing that I remember, the only thing that I took from that was like, okay, the mania. But the main thing that I kicked myself for like forever was just that when Bitcoin was in the like $3,000 to $4,000 range, I was trying to short it because I was just like, we're going down further. We're going to go to 2,000, and not really actually telling myself, oh, hey, we're down 80%. Like these are really good levels for me to start buying because the next wave, when it does happen in 2 years from now, it's going to be huge. And, you're going to make 20 times your money. So just like all in on everything down here. Right. And I just was so focused on trying to like sell the rips, right? Because like on the down move, like in bull market, you want to like buy every dip, right? But like in bear markets, you want to sell every rip. I was so focused on selling the rip that I just totally missed the point. And it was one of those like, I hated the rally from 3,000 to 14,000 so much because it was just going along like 3-4. Then all of a sudden
Yeah.
it like popped up to like
Yeah.
7.5 one day, and like a lot of people I knew were like short at like 5,000 or 4,000 or whatever, like expecting to come back down. It got totally blown out, and it just was one of those things that I've always remembered. So like I think we're in a longer accumulation period. Maybe it takes 3 months, 6 months, but I don't think we have more than 30%
Okay.
to go down, and that would be like 900 for ETH, 900 for ETH, maybe like 13, 14 for Bitcoin, which is honestly, it's like you can like there's a lot of assumptions that you can make. If you don't think it's going below, you can really start to position yourself for the next wave up. And I think the people that are just going to be focused saying like, retail's gone, and they're going to miss it, and they're going to be really pissed off. Like once we break out of this range, so like once ETH like just goes back to, we don't even have to go that high. Like once
I was
ETH
gonna say,
goes back
once we
to,
see
like,
a 2 in front of that
like
number,
2,000,
people are gonna be hated. So I agree.
yeah.
Mhm.
And that's not that far. That's a 30% move. That's a 35%
Yeah.
move, and that could happen in a week.
Wait,
That could happen in a
all
week.
right. Uh-huh.
BTC going back up to 30K, like that's a 40% move.
I mean, it's like a 50% move to get back to 2K. But I get you.
Still, it's a big move,
for me,
but it's not as
close.
big as you think.
I agree with you that we're closer to the bottom than the top, and that's why for me, I feel comfortable having some LP positions going on. If you were in cash already, all right, and then you're looking to deploy now, like I feel okay doing, say, like a WETH USDC UniV3 position with a band from like 900 to 16, right? I feel like that's healthy. Like you'll collect some good fees, and once you think the market's churning around, you could just withdraw that position and then deploy more into ETH, and like you'll be happy. And if it goes down, you can catch all that down up until $900, and your mid price will probably be like around 1,100, 1,200, and then now just remove the LP and hold ETH, right? Like
and
then
then borrow against it and get like 2x leverage. If it goes to Okay, so here's a couple of questions. This is something I've really been thinking about for the past couple of weeks. Now that we're down at like 1,100, 1,200, what is the level in your head for ETH that you would be fully confident putting on a 2x leverage position and never touching it again? Like, just I'm putting this position on. I know I'm never going to get liquidated. I'm just going to leverage up 2x and be fine with it. I'm forgetting it. I'm putting it on the hardware wallet. I'm never touching it again.
I'll say 950.
Yeah, that's about my levels. Like if we ever go to 900, I'm getting 2x leverage. Okay, now next question, 3x leverage.
I mean, it really depends on price. But got into my head, 700. Just fucking close my eyes and just do it. I'll be like 700, just 750, like around there. Just close my eyes and just do it.
Yeah, it's like a $500 liquidation point, right?
Yeah.
Yeah. So look, you just said it. Now write it down and just put it away. And like if we ever go to 900 again, I'm gonna call you up and be like, look, you said you were gonna get 2x leverage. Okay. Like just do it now. Like swap everything to ETH. Get 2x
the whole portfolio, or at least some risk parameters.
I mean, okay, what level does ETH have to get to before you swap your entire portfolio back into to ETH at least?
I mean, I already have some, but if I were 100% stable right now, I would probably do. I think at sub 100, I would start buying, or start rather sub 1,000. I would be buying in like big tranches, like 10%, like each clip, like 10%. So of the portfolio. So, and then just yeah.
Honestly, I think the safest thing to do if you're like fully in stables right now is just go put on a TWAM position in ETH in the Frax swap, and just set it until March 2023. Like give it a 4-month time to enter into ETH, and I bet you have a great position. Then you're gonna get the average amount of ETH over that time period, and you don't have to worry. You don't have to think about, it's going up or it's going down. You're just going to get the average price between now and the end of March. And I think I think by the end of March, we're starting to.
My opinion, I would wait until I will wait until the new year to do that exact position that you just said, and I would actually do it until after April, because that I think, yeah,
April.
No.
Too long. I mean, it's too long. Look, I want the average price between now and April, or like now and March.
No, I would do between January until, I'm sorry. Yeah, I'll probably do between February and June is my 2 months. February and June. Yeah, February and June, or January and June. Like I would do the 4 or 5 months spread between that. I wouldn't do it now, like going into the holiday.
What's coming?
I mean, I feel the Fed is like too happy. I feel the Fed is a little too happy. Bad about... I mean, I'm not gonna LARP as a macro, but if I were to, I would think the Fed is a little bit too happy that they're kind of patting themselves on the shoulder, and they're going to realize that, oh wait, that was a bit too early. We need to crank it up a little bit more, and then they're gonna swing the pendulum further that way, and then by Q2 of next year is when things actually mellow out. So from Q1 to Q2, which, like I said, February to June, is where I would put on that TWAM and then just hopefully get an average price across. Is probably what I would do.
Yeah, one of my theses for 2023, and we're going to do this towards the end of the year about like what kind of our next year predictions are. But yeah, one of the theses that I have is that crypto is going to decouple correlation wise from the broader market. So whether this is done by prices getting low enough, or something else, like something changes, I just think that like the correlation is going to break from us just being like a levered NASDAQ, and that's going to lead into a nice run.
I think that is a very fair point. I think the decoupling must happen first, and then we ride. I agree with that. Yeah. I just don't think that.
Yeah.
I don't know. Yeah.
Because I think in your equity views, I think everything's still overpriced, and we may not go down, but we may have like a decade of zero, like of no equity returns, right? Your equity portfolio is going to do zero between now and the end 2030. So if we do that, there has to be other asset classes which still perform well, and I think crypto's going to do, because we're still in growth and expansion mode. Bitcoin maybe not, but definitely ETH,
everything on
definitely
ETH.
like on-chain dollars and stuff. So
I buy that.
Yeah,
I buy
very bullish about that.
So I was talking with a buddy of mine, and he was obviously holding BTC, and he was a normie, and I told him, I was like now is like BTC's time to shine. Like this whole period of war, crazy inflation, financial system is about to crack. Like this is the moment for BTC to come alive, and yet it's not happening. And what other catalyst is going to be needed, like to get it, like for it to happen?
ETH,
like
ETH
well, ETH flips BTC is done, right? Does even it loses its like. What do you mean?
No, why? No, of course not. No, of course not. It'll still be profitable in mine, and nobody else is going to create a proof of work cryptocurrency. Look, the maxis are right. Is that in a land of just proof of work coins, there is only Bitcoin, right? And you don't need anything else. And they were right about that. But now that we have other types of digital money that are decentralized, namely Ethereum and all the other L1s, it's a totally different landscape, and it's not trying to do what Bitcoin's trying to do. It's a different product, and so the valuation of it can be.
Oh, dude, I agree. I agree. I meant like for the BTC side of things. Yeah. Like once ETH kind of flips BTC, like BTC really loses a lot of clout for like once ETH kind of flips it. It's
Maybe. I think there's still always going to be demand for it. I just think that like when the like remember fees have kind of gone down a bit, but fees can come back really quick. And when they do, then we start like doing PE analysis of ETH again, and all the VCs start dumping in money because the staking rate is just going to like okay. Okay, what happens when we go back to how things were in 2021 when gas fees were like on average 150 and you're paying like around $50 for a transaction. Like the amount of ETH staking rewards is going to be insane.
Plus the
It's
burn
going to be
to
so
deflation,
high.
right? Yeah,
It's just going to be through the roof. Yeah, plus the burn. Yeah, so like price is going to go up. The staking rate is going to be insane. Like we could be looking at like high double digits, like 20%, 30% because of all the fees. That's just going to bring in so much money. And I think that's the next catalyst to drive things higher.
I agree with you. I agree. And now, I need to do a bit more research in this, but I was wondering if you knew if there were a ton more validators, do all of the validator reward pool get split with all of the validators, almost like a mining pool type of economics?
Yeah, I think it goes down a bit, but like honestly, I've seen some like slider bars that you can like drag back and forth. It's only a couple. Really? It's maybe like a 1 or 2% difference.
Because right now it's like 16% of all ETH is staked, right? Give or take around there.
Yeah. I look, if we go up to 30% ETH, I mean, I don't think the rewards would decline dramatically because, like, in addition to like you're pulling all that ETH off the market, right? It's no longer liquid, and so that ETH.
Oh no, I'm not talking about the price. I'm just talking about like the sheer ETH on ETH staking rewards. Like, does that go down by half if the validator's number double?
I don't think so. I don't think so. I think it goes down slowly. I don't think it goes down by half. I don't think it's a fixed amount. But I could be wrong. I could be wrong. I need to look into this, and we'll get back. If anybody watching at home has a good answer for us,
please
drop it in.
We know nothing. I mean, we know something, but also mainly we know nothing.
Yeah.
Yep.
So I think we're coming to the end. We're almost at an hour for this, which I thought we were going to go 20 minutes, but now we're here in an hour. But this was a really good episode. I learned a lot actually, and it was nice to go out and hear your picks, and also have to go looking for some yields as well too, because in the one of the things. I'm going to tell one last thing. So, the staking rewards for Frax shares were in the gutter in 2020 or in 2020 when like Frax shares went to like $1.50 before the switch to Frax 2. It was in the gutter. It's terrible. Oh my god! Like the Frax shares rewards went to like 15% for like a 4-year max lock. It was so bad. But if you had just farmed the entire way through and collected all that Frax shares at like $5, when it went to 40. Now you're sitting on yields that were 100. Previously like 10. Now it's gone up 10x. Now you're sitting on like 100% yields, right? So I like the best thing about farming now is just accumulate. Don't sell anything. Accumulate and wait for the next.
I'm actually consolidating all of the yield I get from CRV and CVX into Frax into FXS. I literally just do this. Yeah.
It's a good idea.
I wish there was a product.
It's a good idea, especially with fractures like hitting $6.20. Like it's just on a tear. I think it's the bottom. We've had oh man, 6 months of accumulation now. This has got to be close to the bottom. Like we first so 620. We first hit this price back in May of 2022. And
I wouldn't say that.
6 months.
Could you share a screen? Because it definitely rallied. It definitely rallied.
I'll share my chart. I'm saying like on the down move, right? Okay. Yeah. So look, if you go back, this little line is like touching here. Let me zoom in a little bit.
Yeah, right there. Oops. Right there is good.
right? So 620 back in May 20th.
Okay, you're right.
Of
That's
this
fair.
year.
Yeah, that's fair. So
And we're sitting at that price right now.
Yeah,
That's it's a huge accumulation
between $4 to
period, and
$8.
we've had one, two,
you had a
three,
good 6 months to buy
like,
anywhere between $4 to $8. Yeah, that's fair.
And each low is higher than the next. So like, you know, this one went down to 389. This one was at 402. This one is at 421. I'd like to see like new highs being made, but you know, if you look just on like a accumulation perspective with the halvening coming and just the amount of time we've been at these prices and the amount of like growth that Frax has had during that time, I think that's fair.
I think that's fair.
Very close.
All right, man. Did you want to tell the audience why we are doing this yield episode?
Oh yeah. So we probably going to have to do this in part 2 or like another episode somewhere else. But Kid and I are going to choose the top strategy that we put here today, and we're gonna put up $10,000, and we're just gonna put it in. We're not sure how long it's going to go. It really depends on the frequency of the show. So from one show to the next, we'll invest the cash. And then track how it goes. So we're actually going to put our money's where our mouth is and choose the best yield.
And for this week's episode, what yield are we thinking? Let's sign off with that.
Let me take a look back and look. Let me hear what
my pick is the ETH one, the S-Frax ETH one. We had 10K in stables. I would buy 10K worth of Frax ETH, stake it into S-Frax ETH, borrow 50% of that Frax, and then do the Frax ETH pair 6% stake, and then sit pretty at 1.5x, earning 12%. Is what I would do. No,
but you want to double
I
up.
do not want to get that high. No. I do not want to get. I want 1.5x leverage on ETH. Okay. And then 1.5x leverage on ETH, earning 12% is what I think we could sit.
I kind of agree with you. I'm really bullish on ETH right now. I think it's the best thing to do. Like looking at where we are, I think it's really good. I would I'd have a modest amount of leverage here, like 1.2 or 1.3, but maybe it's not good until we get to 2. So we'll actually do that. We'll post the starting balance on Twitter, and we'll share it with you guys as it goes along. And then once we figure out the frequency of these episodes, we'll give you an update every single time about how it's done and about how our picks have performed. Probably going to do really well because
one or the other.
Shitty, because probably going to do pretty bad, you know, because everything always counter trades.
Or if you
we'll see.
Ape together stronger. But this is not financial advice. We are biased. We hold these tokens and we want the price to go up. No. So do your own research.
Exactly. And don't buy what we buy.
Definitely. Life advice.
Exactly. Don't copy trade us because
all right, Sam, you want to sign us out?
Okay. I think it's good. We need a name. So we're going to run this contest, and please name the show. What was your thoughts on the name?
I don't want to pollute the audience. I just want to hear what they had to say.
Okay, no pollution. But we're gonna have a reward, and we're gonna post it on Twitter, and you guys can tell us what the best name is. So, all right, thank you so much for joining, and we'll see you for the next episode. Peace.